folks, Dan Frio here, the Mortgage Update. And I just want to say a special thanks to everybody watching. I'm getting overwhelming phone calls and emails and just people reaching out for my help. So probably every day I probably get 4 or 5 people calling throughout the country, just looking for help. So thank you so much. So let's get on why you logged in today. Well, the other day we saw a lock alert, and I said, don't lock. And if you listened, it paid off. So let's see what happened today. The market wrap today isn't ready yet, but basically what happened is the Fed came out and announced that they're not going to do anything. Well, that ended up being great news. So here's all the headlines, and I always show you this just to back up what I'm telling you. Is Dow's up 30 points because of the Fed. Owners talk, the Fed didn't do anything, and we're not expecting a recession next year. I don't say we're going to go in a full-blown recession, but I think things are going to slow, and they're continuing to slow right now. But I don't think it's going to hit epidemic, proportion. Treasury's dropped. Federal Reserve Powell, he's the chairman. He oversees the Fed. Suggests rates will remain low. So the biggest thing here today, we didn't hear anything about tariffs, which was good. The market stayed paused until the Federal Reserve came out and said, we're really comfortable where we are right now, and we're not expecting to raise rates in the future. We're going to stay right where we are, and we're going to be sitting here and monitoring a lot of things. Those things are inflation, employment, manufacturing. Those are the main components of everything. So what we also follow here is I follow more things than that to kind of give us a little more kind of tools in our belt, I'll say. I watch the transportation indexes and several other components that I feel are major triggers or major signs of what's to come. All that stuff is basically signaling a slowdown within the next year. So I think the Fed, these aren't dumb people. They're seeing a lot of the same things I do. I watch, and they're probably watching that as well, just don't come out and say that because everything they say is under a microscope. So I don't really see things changing all that much. You're going to see bounces in the market basically based on the Chinese and the U.S. trade tariff wars, because that's playing a huge impact on our economy, but playing basically almost a double impact on China. So let's see what happened today. The market's up 23. That's phenomenal. That's what we're looking for. So if you follow my channel, this is the number that we watch on a daily basis. That's why I have probably, as soon as I post, I probably have 100 views like within 2 minutes of my post. So thanks. So what we watch here, just for a recap for those newbies out there, is the UMBS is basically mortgage-backed securities. Okay, this is a batch of mortgages that are sold on Wall Street as a bond. Okay, this is what's happening to the price of that bond, how much you're paying for that bond. So as you pay more for the bond, the yield or the rate of return you're getting on that bond investment goes down because you're paying more for that bond. So as the price goes up, yields come down. Sorry, I got my dogs in the background. I just got home. I figured I'd do this because I want to do some other things tonight, so I figured I'd do this post real quick. So bear with me. My dogs might be in the background, and my daughter just came home from college. You might even hear her. So prices go up, yields come down. Prices go down, yields go up. So we've been flat. You can see we've been flat for the past couple weeks. I locked a lot of clients right here, and a lot of the guys in my office come and say, that was they might have locked her. This was Wednesday before Thanksgiving. By the time many people came back on Friday or Monday, we were back to square one again. The rates were higher than we kind of left off. So this was perfect timing. We locked in about $5 million worth of loans there, and then since then we've kind of been floating. So what we monitor on this channel is mortgage-backed securities. We want to see what the trend is and what's going on with mortgage rates. I think we're going to stay in this pattern, especially through the end of the year. There's really no uncertainties there other than the tariff wars or tariff information. So let me explain this chart to you a little bit. Now, we won't go into too big a detail because that's why you're watching here. You're letting me do this for you. So we watched two triggers. These are what's called the Fibonacci levels, and there's the ceiling and the floor. Think of these as bumpers when you're bowling. You know, it goes like this. So we're usually staying in that range. So that's our upper and lower range. Then we put in other components or other charts to see, kind of get a little bit of a microscope on where are we, you know, what's digging down in and putting a microscope on that. So if you look up here, you'll see DMA. So that's day moving average. So this is a 25-day moving average. So what's the average of this, what's going on in the past 25 days? 50-day, 100-day. I'm going to get rid of 200 days. That's way out there. So it blows it up a little bit more. You can see these lines, they play a pretty good role because a lot of this stuff, it'll hit these numbers. Let's do this just to make it a little more simpler for you. Let's go down to a 25-day. And you might see some patterns here. See it hit there, stopped, hit there, stopped, hit there, stopped. These do play, I mean, really, we watch this on a daily basis. So if everything's, you know, standard, if you go off of the 25-day moving average, you know, our rates should range in this place here. Basically flat. So now let's go to a 50-day moving average. Let's see where that puts us. Kind of the same thing. It's predicting a flat range here. Let's go to a 100-day moving average. It's saying we could have an uptick, which again is good. Up is higher prices for the bond. You pay more for a bond. The yield or the interest rate or the mortgage rate goes down. So that's good because basically if you go off of all these averages, we're either steady or higher. And again, higher here is good because that's lower rates. Okay, so that's what I'm predicting for the markets. Again, in a normal market, this is what's going to happen. But the tariff trade is playing havoc on numbers. You can see, look at this day. And this is nuts. I mean, that's a change in the day. That might be a 0.25% in the interest rate of a mortgage. So if your mortgage advisor freaked out and locked you in down here, you might be at 4.375, where today I can get you 3.75. You know, if that is in fact what's going on, call me. You're not obligated until the point you close, you're not obligated to go with the place that you're with now. So if I can be of any help, please reach out to me and I'll give you all my information at the end of the video. So these are things that I watch on a daily basis. I watch this, I watch the news, I follow the news as well as here, and then I post this every day. There's a little newsletter thing that I send out saying everyone is still refinancing. FHA refinance is at a 3-year high. If you're in an FHA loan, do a couple things. One, it's very simple to refinance an FHA loan. I get people calling me saying, I'm at 5%, but I got a brand new job and all this other stuff. Let me give you a little trick that I have. I have an FHA refinance program that all that requires is we pull your credit score and your mortgage history. That's it. We base it off your credit score, and as long as you've made your last 12 payments on time, I can refinance you at the current rates. It doesn't matter job-wise. You just started a job. We don't need job verification of income. We do not need an appraisal. So your appraisal doesn't matter, and your income doesn't matter. Just a little trick there. That's my FHA no-doc program, basically, is what we call it. And you know, so if you have an FHA loan, want to take advantage of today's rates, and you have some hiccups somewhere, you might be inundated with a ton of other debt. Doesn't matter. Somebody might have said, "Oh, you don't debt ratio." Doesn't matter. I'm not looking at your income. I'm not looking at your other debt. I just want to make sure your mortgage payments is paid okay now. Because the thinking behind it is, I don't want comments saying, well, that's, you're doing dumb loans again. No, this isn't a dumb loan. Let's say your rate's at 5 and your payment's $2,000 and you paid the last 12 months on time perfectly. Well, now I'm refinancing you at 3.75. Your payment went down $200. Well, if you were paying the $2,000 on time, you should be able to make the $1,800 payment on time. That's the thought process behind the whole thing. So I'd love to help you there. Mortgage rates did improve throughout the day, which, like I said, which we followed right here. We were up 23. So that backs that data up. The difference between the FOMC, basically the Federal Reserve, what they said today versus previously, basically they came in and said, you know what, we're going to keep rates low, but we're going to continue to monitor things. Inflation's intact. The job market is at a substantial pace right now. Manufacturing is okay. But one of the biggest things too is the inflation numbers, and they're coming back okay. The economic calendar there was a lot of stuff that came out today. Inflation's still in line with their expectations and actually a little bit lower. So there's no concerns there. So please make sure follow me on YouTube if you would. Please don't forget to subscribe down below. Click the bell so when I do post, you get an alert. Check out, I have like 400 videos. If you're looking at down payment assistance programs, you're looking at how do you qualify for an FHA loan? How do you qualify for, an investment property? What is PMI? How can I get rid of PMI? What's my best way to refinance? Should I renovate my house with a home equity loan or refinance my mortgage? I cover all this stuff on that. Check me out on Facebook, The Mortgage Update with Dan Frio. Check me out on LinkedIn. You can see my profile there. Google reviews, The Mortgage Update with Dan Frio. I am with Parkside Lending in St. Charles, Illinois, basically a suburb of Chicago. I have a branch that I run there. I'm licensed right now at about 2/3 of the country. We continue to add states on a daily basis. So if I could be of any help, let me know. Let me tell you just briefly about myself. And for those newbies, for those that hear me every day, apologize, I'll do it fast. But for the newbies, my name is Dan Frio. I'm a mortgage advisor, have been for over 30 years. I'm in Chicagoland area, but again, I can cover about 2/3 of the country. I have 2 radio shows in Chicago. One you can hear on WYLL Radio. It's a Christian radio station. I've been on for years and years and years and years. I'm the exclusive mortgage company on that station. I have a show every night from 7:30 to 8 p.m. Again, that's WYLL Radio in Chicago. I'm also on WIND Radio Saturday mornings from 7 to 8 a.m. And I publish all that data or all that content I put on YouTube, and I podcast it. So if you can't hear me live there, check me out on iTunes, Spotify, whatever, The Mortgage Update with Dan Frio. If I can help you, have questions, have concerns, you want a second opinion, you want to, is the rate I'm getting any good? Can you check it? Is there anything you can help me with? Maybe I can cut some of your costs for you. If I can help in any way, please reach out. 844-775-LOAN, and loan is 5626. Email me at D for Dan Frio, FRIO, at parksidelending.com. And again, actually probably the best way to reach me or look me up, just Google The Mortgage Update with Dan Frio. And you should find, like I said, I've done this for 32, I think going on 33 years now. I'm 54 years old. I've basically done it since I graduated college. So thank you so much for watching. God bless you. I'll post again tomorrow. And I always tell people, if you're in the mortgage field or you're a realtor, please subscribe and click the bell, because what will happen is if there's major alerts during the day, I'll post and say, guys, I'm locking, and this is things I'm doing. So you can follow my lead or you don't have to. Doesn't matter. But like I said, I've done this a long time, and I take pride in what I do. So thank you so much. God bless. Take care. Be back tomorrow, God willing. Same time, same place. See you then.